Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 21st of May 2020. And yesterday we produced a video entitled Helicopter Money Will Cause Gold and Silver Prices to Rise. And on Monday a video entitled Gold and Silver Rose and Then Fell Back. Why? And on Sunday, why serious investors and advisors now recommend gold. Now, going back to yesterday's video, helicopter money will cause gold and silver prices to rise. Gold stood at $1,744 and silver at $17.34. Now, today at 1310 GMT+1, gold is $1,738, down just $6, and silver is $17.28, down just 6 cents. We did point out yesterday there'll be a short period of consolidation, but we will, short to medium term, expect higher prices. And we concluded yesterday's video, in fact, with these words. We can see from these articles how clearly the general directions from virtually all central banks to zero rates, negative rates, QE and bank liquidity funding are heading. This serves only to benefit gold and silver in the medium term. There may be a delay between now and when their prices peak, as we saw between 2008 and 2011, but steady incremental rises do appear to be the blueprint, which precious metals are most likely to follow, unquote. Now today we wish to enlarge just a little on the potential for negative interest rates and why JPMorgan recommends gold. And also a controversial comment by the head of one hedge fund who is actually claiming that one's gold holdings could in fact be confiscated once again by the state. So let's listen to these two articles, and we shall comment on them immediately afterwards. Bloomberg article dated May 21st, 2020. Headline: JPMorgan sees currency debasement, payback risk from stimulus. The unprecedented monetary and fiscal measures unleashed around the world may lead to weaker long-term growth and currency debasement, supporting gold prices, according to JPMorgan Chase & Co. The risk of currency debasement may heighten next year, John Normand and Federico Manicardi wrote in the report, and will show in the value of Japanese yen or gold rather than the dollar. The risk of a surge in inflation will remain trivial in 2020 and stay subdued over the next 2 years, they said. The reductions in interest rates across the group of 10 countries in response to the pandemic-induced halt to their economies left most currencies yielding close to zero on a nominal basis, though real interest rate gaps were higher in Japan, the Eurozone and Switzerland, according to the analysis. If the United States continues to suck in capital and fiscal deficits, overstate the risks to external financing, the payback via G10 currencies will be concentrated in those with above-average real rate advantages to the United States, such as the yen and Swiss franc, the strategist wrote. The strategist concluded it is probably too early to hedge against a rise in inflation and higher bond yields, as well as wider spreads from sovereign ratings downgrades. The focus now should be directed at currency debasement, which they say had a high likelihood given the huge financing burden carried by the United States. Those who see in the major currencies just different shades of the same long-term liabilities should simply remain long the world's legacy reserve currency, gold, they wrote. End of article. Bloomberg article dated May 20th, 2020. Odey says governments may make private gold ownership illegal. Crispin Odey, one of Europe's highest-profile hedge fund managers, said that governments may ban private gold ownership if they lose control of inflation in the wake of the coronavirus crisis. It is no surprise that people are buying gold, but the authorities may attempt at some point to demonetize gold, making it illegal to own as a private individual. Odey wrote in a letter to investors seen by Bloomberg. They will only do this if they feel the need to create a stable unit of account for world trade. Odey, a long-standing critic of central bank policies who is known for his apocalyptic predictions, increased the gold position in his flagship Odey European Inc. fund during the course of April. Holdings of June gold futures represented 39.9% of the fund's net asset value at the end of the month, up from 15.9% at the end of March. A stake in Barrick Gold Corp, the world's number 2 gold miner, was his largest single long equity position. The fund, which gained 21% in March, was down 9.5% in April, according to the letter. A spokesman for Odey declined to comment. Fear of government confiscation is a common theme among some of gold's most ardent supporters, who point for precedent to the United States government forced purchases of private bullion holdings in 1933 as part of a devaluation of the dollar. The price of gold was raised from $20.67 an ounce to $35, where it remained until the United States ended the gold standard in 1971. Today, with major currencies no longer linked to gold, there's no indication that governments or central banks are considering any similar move. Gold futures for June delivery rose 0.4% to $1,753.20 an ounce at 7:38 a.m. on the COMEX in New York, close to a 7-year high. Odey, who has previously compared the current pandemic to the Great Depression of the 1930s, argued that central banks would fail to contain inflation as the economy eventually recovers from the impact of the global lockdowns. History is filled with examples where rulers have, in moments of crisis, resorted to debasing the coinage, he wrote. Odey is not alone in betting that gold will benefit as high inflation follows the coronavirus crisis, although market measures of inflation expectations show that it's far from a consensus view. High inflation would hurt long-dated bonds and growth stocks, Odey predicted, citing forecasts for inflation rates of 5 to 15% within 15 months. I very much expect that the authorities will fight these prevailing trends for every inch of the way, but I also expect them to lose the fight, he wrote. Odey is known for his eye-catching comments and bearish market outlook. In 2016, he predicted that a potential recession and higher inflation following the Brexit vote could lead to UK stocks slumping 80%. The following year, he told investors to watch out for the Minsky moment, referring to the term inspired by the economist Hyman Minsky to describe a sudden market collapse that follows the exhaustion of credit. End of article. So, as per our video yesterday and during the past few weeks, there are forecasts that the level of currency debasement will eventually lead to inflation. Whilst traditional gold bugs are of the opinion this will occur sooner rather than later, and bearing in mind they were of that opinion ever since 2009, the majority of economists believe that we're more likely to achieve deflation or stagflation first, but most agree that inflation will eventually occur. Now, of course, timing is everything, but there is an increasing belief amongst investors, advisors, and fund managers that gold will play a more significant and important part in one's investment decisions moving forward. Some, like Crispin Odey, believes that gold will become so significant that governments may indeed make private ownership illegal. Now, whilst we accept that it is within the power of governments to do so, its implementation is fraught with difficulty. We're also not convinced that governments would go down this route, as there are so many other measures it could take to achieve their economic goals, without penalising those who invested in precious metals. Now, of course, nothing can be taken off the table entirely, but that said, the very fact that the subject is even being discussed and aired publicly in itself highlights how the whole issue surrounding gold investment is rising in importance. What do you think? Do share your thoughts. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. Not forgetting we update our Richard and Greg channel every few days, and we placed a new video on that channel yesterday morning. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com. And if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.